Did you register your company for VAT? Before you do, let me tell you all about the tax invoices that are going to be an essential part of transactions with your clients and compliance with the requirements of the VAT law. There are three main types of tax invoices. The first is the full tax invoice, which includes information related to supply such as date of supply, invoice issue date, invoice serial number, supplier and client details, tax rate applied, and other related information. The second type of tax invoice is the Simplified Tax Invoice, which is issued for supplies with a value less than 500 OMR, excluding VAT. The information included in a Simplified Tax Invoice is similar to that of a full tax invoice. However, it does not include the invoice serial number and the date of advanced payment. The third type of tax invoice is the tax invoice for used goods supplied in accordance with the profit margin mechanism. The invoice includes all the details in a full tax invoice except for the tax due. You must mention in the invoice that you've calculated the tax using the profit margin mechanism. If the person that you have purchased the used goods from isn't registered for VAT, then you must issue a self-issued profit margin invoice, which includes details about you and the seller and their signature, the invoice serial number, purchase date, and brief description of the goods purchased and its purchase price. As a VAT-registered person, you may amend the value of the output VAT due at a later date if the supply got rejected or canceled, wholly or partially, or if the nature of the supply has changed, or if the goods or services have been returned. You can also issue a summary tax invoice that lists all the goods and services supplied to the same client during a particular month. It also includes the same details as in a full tax invoice. You may ask, why do we need all these invoices? Well, keeping all your tax invoices, accounting books and records, and customs documents related to exported and imported goods is necessary for preparing and submitting the VAT return later on. It is also important to keep these records for a period of 10 years, or 15 years if they relate to real estate. Remember, keeping these documents will protect your rights and help you avoid incurring fines and/or imprisonment.